Good afternoon, this is Pat Walker at Mission Winners doing an overview of the ETFs. Why do we do this? Not to spend time doing something that's not worth our time. We do it to be more organized and systematized. Ponder this, and this is a fact. Don't you want to look for strong stocks? Well, normally strong stocks are in strong sectors. What do you want to avoid? Weak sectors, weak stocks. So we do this to save time. So let's roll with it and see what we have. Taking it from the top, alphabetical. ARG Innovation, super hot ETF for a while. Really on a roll. And since then, it's kind of lagging. Needs to push through the 200-day and the 50-day. It's lagging at this point in time. ARKW, Generation Internet. It's lagging at this point in time. What's that tell us? Well, it's not a great place to shop, to tell you the truth. Biotechnology, starting to pick back up above the 50-day. What does that tell us? Maybe look at some biotechnology stocks. Cloud computing, super strong. Look at this. For much of last year, starting to pick back up again. Right here. Get to it. There we go. But still, not a lot of power. So again, what does that tell us to do? That's maybe a group not to concentrate on. Energy, hanging in there, maybe forming a company handle. Energy stocks, good. Dow Jones Internet. All right, this one owns a lot of internet stocks. Still kind of lagging. IBD 50, this was really strong last year. Look at this run. And now it's really not doing much of anything. It's lagging. Those growth stocks are lagging. Gold miners, fairly strong. Look at this. We're involved with this, by the way. Okay. Gold miners, and it has been strong. That's good. Maybe look at some gold miners. Junior gold miners, hanging in there too. Look at some junior gold miner stocks. Gold, look at this thing picking up. Isn't that nice? What does that tell you? Maybe look at some gold areas. There we go. Cybersecurity was really strong last year. Look at that run. Is that beautiful? And now, just kind of going sideways. Not a lot of power right there. Biotechnology, another biotechnology ETF. Folks, this isn't a leadership chart. Move on. This is not a leadership chart. All right? Nor is this. It's okay, but not as strong. All right? So here we go. Continue onward. Online retail. It's lagging now. It was strong, and now it's lagging. What does this tell us? Well, I don't know if I really need to dig deep on a lot of online retail stocks. There you go. There you go. Also, we lose the ego like, oh, I can find the one that is good. Why? Why? Don't make this an ego game. Get in line with what is, and we'll do much better. North American technology, starting to pick up a little bit more. That's good to see, like that. Medical was really strong, pulling back. Had pretty bad tail bar on Friday. Look at that. And this was some serious selling. So something to be a little cautious with. Mid-cap, demonstrating some strength. Mid-cap stocks, like that. Home builders, really great run. Pulled back on some volume selling here. Look at this. But it's been a huge run, okay? Needs to start demonstrating a little bit more strength. Growth. This one, well, you can see I wrote it under. This one owns a lot of the big tech names. See that right there? And a lot of the MaxLick stuff. Doesn't look too bad, does it? Starting to improve a bit. Good. And what does that tell us? Start looking at some MaxLick stocks. And what have we? We look at them every night. There's going to be another video on those, okay? MaxLick stocks. They are my go-to list. I love those stocks. Airline, just demonstrating some basing action right here. Regional banking, doesn't look too bad. Forming a company handle. Regional banks, good. Mid-cap stocks, demonstrating some strength here. Above the moving averages, good to see. Oil services, just chopping around here, but it's above the moving averages. That's okay. Maybe forming a company handle. Online retail, folks, leave it alone for now. Isn't that great? Right there, it says, don't really need to look at a lot in this sector. Good, move on. Software was so strong last year. Look at that run, folks. That is nothing but money. And we were involved in software heavy many times. And now it's lagging. What does that tell us right there? I don't really need to focus on a lot of software stocks. Done. QLD, NASDAQ 100, starting to demonstrate a little bit of strength, and that's nice to see. The other one, the non-leveraged QQQ, demonstrating some strength. That's good to see. Cloud computing. This was really strong last year. Look at that. Is that sweet potato pie? And yeah, we were involved with it quite a bit. Quite a bit. My apologies. Let me fix that real quick. Drag that line down. There we go. So, but now what is it doing, folks? It was strong and now it's underperforming. Leave it alone. Silver. Silver's hanging in there. Think about this. Silver and gold. Hey, there's something to be said there, isn't there? There's a theme. Precious metals. Steel, hanging in there. How do you build things with steel? Still looks good. And we're involved with some steel stocks. Semiconductors, another semiconductor. It's just chopping around here. But it is picking up a little bit again. Volume's starting to come into it. What does that tell us? Oh, maybe it's something to start looking more into. Another semiconductor leveraged, picking up too. Spiders, near all-time highs. S&P 500, good to see. The leveraged one, similar situation, but it did have some selling volume in there, didn't it? Had some up volume too, chopping around, needs to demonstrate some leadership, more leadership, but again, it's hanging in there. What does that tell us? It's okay to look like the big leading S&P 500 stocks. There you go. Solar. In 1 second, you look at this and say, I ain't looking at solar stocks. Thanks, done, bye. Isn't that neat? I'll go back to it. I was being cute there. But on a serious note, this is the ETF that is involved in the solar industry. What does that tell you? It's in a downtrend. Leave it alone. So this might be the bottom. Let's not focus on might. Let's improve our odds and say, let's focus on what looks good. There you go. Move on. Small cap, still underperforming, but picked up a little bit. That's good to see. Oil. Oil's pretty good. Slick deal. Okay, I had to say it. It's dad humor. Here we go. Aerospace and defense. Look at that, hitting highs. Okay, something to take a look into. Biotechnology, another biotech. What is this? See, you've built a case. We've seen 3 different biotechnology ETFs. All of them look awful. What does that tell us? Leave it alone. Move on. There's better to holes to go fishing in. All right? Here's the analogy for you. You got 2 people fishing. One person's catching, a fish every 10 minutes. The other one not catching anything. Which pond are you going to go fishing in? You're going to go fishing in the pond where the people are catching the fish, right? Similar things with ETFs. Go in and look what looks good, all right? Where they're catching fish, strong. It's a goofy analogy, but it works. Energy, here's another energy hanging in there. Home builders, still good, folks. Pulled back a little bit here on some volume, all right? But it's still in good shape. Basic materials hanging in there. How do you build things? You need materials. Well, that looks all right to me. Communications hitting highs. Look at some communication stocks. You can click on that ticker symbol, XLC. Google it, top 10 holdings, and it'll tell you the top stocks in that group. Boom, done. Energy, another energy ETF hanging in. Financials, look at this, near highs. Okay, what's a major financial stock? Big name. What is it? Goldman Sachs. Goldman Sachs. We're going to do something in a minute here, okay? So that's hanging in there. Financials. Industrials, hanging in there. Industrial stocks, good. Technology, still lagging a little bit, but it did improve. Technology. Consumer staples, hanging in there, all right? That's good. Utilities, just going sideways. When utilities are really flying, it normally says they're a defensive sector and money's looking for a safe haven. When they start to underperform, it means money's going into more aggressive growth opportunities. There we go. Consumer discretionary was really strong, just kind of hanging in there, nothing really special. Metals and mining, look at this. And guess what? Surprise, surprise. We're involved with some metals and mining stocks. There you go. Retail. Retail was really strong, and now it's just going sideways, but it could be forming a great big cup and a handle. Software. Hanging in there. I'm about done here. Back to the top. You can say, well, gosh, you talk about, retailing. I wonder what they were, what was something they were buying? Oh, maybe this one here in mid-March. How's that? That's a nice lift. And that was a keyless stock right there. So oh, here's another one for you that was a keyless stock. We were on target here too. It's a bad pun, but I have to do it. Because hey, it's the weekend. You got to have a little fun. Target, target, target. There you go. Anyway, just want to systematize a few things for you. What to take a look at. We're going to do another video on the max list, but this helps us a lot on what to focus on and what to avoid. Isn't that what you want? You got a limited amount of money. You got a limited amount of time. Let's use it wisely.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.